From control to responsibility, the broker's ultimate liability. As we move forward from Section 22, where we focused on signature cards and controlling who has access to funds, we now take the next step by understanding who is ultimately responsible for those funds. While signature cards establish authorization and limit who can access trust accounts, they do not eliminate liability. In Arizona, that responsibility rests entirely with the designated broker, making this one of the most critical concepts in property management operations and compliance. Simply put, Section 22 was about who can touch the money. Section 23 is about who is accountable when something goes wrong. In Arizona, the designated broker is responsible for all funds held in trust accounts, including tenant security deposits, rental income collected on behalf of owners, maintenance reserves, and any other client funds. Under ARS, paragraph 32-2174, and ARS, paragraph 32-2151, these funds must be handled with strict care, proper accounting, and complete separation from brokerage operating funds. Even if a property manager or employee mishandles funds, the designated broker remains accountable. This directly ties back to the signature card discussion. While access may be limited and controlled, liability cannot be delegated. Because of this level of responsibility, designated brokers must implement clear written policies and procedures for managing trust accounts. These policies should include structured processes for handling deposits and disbursements, limiting access to authorized individuals, requiring approvals for certain transactions, and conducting regular reconciliations. For example, monthly reconciliation of trust accounts allows brokers to identify discrepancies early, preventing minor issues from becoming major compliance violations. When combined with proper signature controls from the prior section, these systems create both control and accountability, which are the foundation of strong property management operations. Beyond trust accounts, brokers are also responsible for ensuring full compliance with Arizona real estate laws and ADRI regulations. This includes licensing requirements, advertising rules, fair housing compliance, and proper handling of transaction records. Violations in any of these areas can lead to disciplinary action under ARS paragraph 32-2153, including fines, suspension, or revocation of a license. For example, poor trust account management combined with missing documentation could trigger an audit and expose the brokerage to significant penalties. Compliance must be built into daily operations, not treated as an afterthought. Another critical layer of liability involves agent supervision. Under AAC R428-1103, the designated broker is responsible for the actions and conduct of all agents under their supervision. This means that even if the broker is unaware of a violation, they can still be held accountable. For example, if an agent improperly deposits tenant funds or fails to follow trust account procedures, the broker remains liable. This reinforces the importance of not only controlling access, Section 22, but also actively monitoring activity through supervision, training, and review systems. Errors and omissions. E&O insurance plays an important role in protecting the brokerage from financial exposure related to mistakes or negligence. While strong policies and supervision reduce risk, errors can still occur. E&O insurance helps cover legal costs and potential claims arising from issues such as mismanagement of funds or transaction errors. However, it is important to understand that insurance is not a replacement for compliance. It is simply a safety net. The best protection is always prevention through strong systems and consistent oversight. Documentation and record-keeping are also essential components of managing liability. Arizona law requires brokers to maintain detailed records of trust account activity, transactions, and client communications. If proper documentation is not maintained, it becomes difficult to prove compliance during an audit or dispute. This ties directly back to ARS, paragraph 32-2151.01, and reinforces earlier sections on systems and organization. In property management, if it is not documented, it is often treated as if it never happened. In addition to financial responsibilities, brokers must also ensure compliance with fair housing laws. Discriminatory practices, even if committed by an agent, can result in serious legal consequences for the broker and the brokerage. This expands liability beyond financial management and into operational conduct, emphasizing the importance of training, policies, and consistent enforcement. Finally, in today's technology-driven environment, cybersecurity has become an increasing area of liability. Property managers handle sensitive financial and personal information, and failure to protect this data can result in breaches, legal exposure, and loss of client trust. Brokers must implement secure systems, control access to data, and train their teams to recognize risks such as phishing and fraud. This once again connects back to Section 22. Just as we control access to bank accounts, we must also control access to digital information. As we tie this section back to the overall course, one theme becomes clear: responsibility always flows upward. From financial systems and communication to supervision and compliance, every aspect of property management ultimately leads back to the designated broker. Signature cards control who can access funds, but trust account liability defines who is responsible when something goes wrong. By combining strong controls with strong oversight, brokers can protect their business, their clients, and their license. Online discussion. Why doesn't controlling access to a trust account eliminate a broker's liability? Answer: because Arizona law holds the designated broker fully responsible for all trust funds, regardless of who has access or who made the error. How do signature cards and trust account policies work together to reduce risk? Answer: signature cards control who can access funds, while policies and procedures ensure those funds are properly managed and monitored. Why is supervision critical when managing trust accounts? Answer: because brokers are responsible for the actions of their agents and must actively oversee financial activity to ensure compliance.